Hey, okay, we're here today with Mr. Brady Beyer from Intercap Lending, and I thought it would be great to start my first podcast with you talking about interest rates because that is all the talk right now in the industry. Essentially, we are focused on how high they are, and affordability of housing has become a huge topic. And so we would love to hear from the experts about what's really going on out there.
And thank you for having me. This is, I'm excited to do this, and this is a topic that I'm very passionate about because there is a lot of talk right now in the market about, is it the right time to buy? Payments can be a little bit scary right now, but, we've got some great opportunities to, assist with lowering those monthly payments and get in while the getting's good. So let's
That's
get
awesome.
to it.
Okay, tell me, what are some of the things that you're seeing?
First thing right now, home sales prices have declined a little bit. So these highs that we've seen the last few years, we feel like we're kind of at the bottom of the market. So you can actually go buy a house on sale right now. I mean, if you're doing a normal 30-year fixed, plain Jane vanilla mortgage, it doesn't feel like your house is on sale, but there are some programs that we can get that payment lower for you.
Right.
And I truly believe now is the right time because acquisition price is everything. I mean, yes, rates and payments are important, but even though the interest rates are higher, if you're saving 50 to 100,000 on a house, it would take that, lower monthly payment many years, like 10 plus years, for that to take into effect the benefit of the cheaper price.
Right. And we are seeing prices kind of, some homes we're seeing major drops, some homes we're just kind of seeing the prices remain level.
Mm-hmm.
So you can look at that as a decline in terms of not having that appreciation that we would normally see. But I think everyone's also kind of looking at what's going to happen when rates come back down. And
Yes.
what do you see is going to happen when that happens here in Utah?
There's going to be blood in the water. The term that I keep hearing and I like is it will be frothy.
Frothy?
Frothy. So just what we saw during the pandemic, multiple offers, above list offerings, escalation clauses. What's happening right now is homes are sitting on the market a little bit longer, and whether or not that home has taken a huge price reduction, you have sellers that are willing to contribute some closing costs to help get the house off the market.
Right.
So we can't ignore that.
Right.
So even if you don't get the best deal of the century on a house, in most cases we are seeing sellers contribute closing costs and even, temporary rate buy downs.
Right.
But the whole reason for that is everybody is scared of the rates.
Mm-hmm.
So nobody's in the home buying pool right now. Everyone's on the edge waiting for rates to drop, and rates are very important, but rates are temporary.
Right.
Acquisition price is permanent. So if you're waiting for something to happen and you're ignoring the savings that can occur right now,
Right, the overall savings.
yeah, we need
Right.
to look at big picture.
Yeah, so for example, last year we're seeing people offer up to, $80,000 over ask price. And that's in cash,
Yeah,
right?
and hard earnest money, non-refundable
Right.
earnest money,
So
no protections
you
built
look
in.
in terms of how much interest extra could you pay right now with this higher bit of rate for how many months until it comes back down to refi to get you to that $80,000 number or whatever it is. That's a lot. That's a long time you could carry that rate before you reach that.
Yeah, absolutely. So I'm trying to say the cost, the waiting cost, it's gonna, as you mentioned, it's gonna take so long for you to catch up into what that purchase price savings would be.
Right.
Sometimes it doesn't make sense.
Right.
And most people only carry a mortgage on their house for 5 years.
Mm-hmm.
So how long are you going to be in that house?
Right.
So even if we look at, we talked about we're projecting interest rates to come down. We don't know exactly when that's going to be. We know the Fed has some definite goals with inflation that they're trying to meet. But we feel in the next 2 to 3 years, there is going to be an opportunity to be lower than where we're at now. So
Yeah. And at that point, we'll be doing refinances
yes.
right, left, and center. Okay. Well, that's pretty awesome. I think you're absolutely right. I think as far as my clients are concerned, we're seeing a lot more negotiation back and forth between buyer and seller. The seller is able to offer, closing costs or even helping them buy down the rate or a combination of both. Tell me what else you're seeing out there.
Well, let's talk about, when you mention buy down the rate, there's two kinds of rate buy downs. You have the permanent buy down, where we're going to buy that rate down for the next 30 years. And investors are pretty savvy right now. I think most loan servicers and mortgage investors know that we're not going to have these rates forever. So if you're looking to buy your rate down long term, your money just doesn't go very far. It can get very expensive, and you're not going to get much lower of a rate than what the market rates are, because they know their opportunity to service that loan, they're probably only seeing 12 to 36 months in servicing. So why should they give you a great deal doing a permanent interest rate reduction when you're going to refi at your first opportunity?
Sure.
And then that loan's going to go to someone else. So our most popular option that we're seeing right now is a temporary buy down, and that's where you're either buying it down for the first year, the first 2 years, or the first 3 years. And what I love about this is that it hedges the market both ways. We're hedging that if rates come down, you're going to have an opportunity to refinance, and the sellers are actually going to subsidize your first 1 year, 2 years, or 3 years of payments. So this is like the perfect storm. I actually do get to go buy my house on sale right now and get an immediate benefit to a lower payment right now.
Right. Now those funds come directly from the seller. Is that
Correct.
right?
Yep. Buyers can't pay their own buy down. Has to come from seller contributions. It can be a lender contribution, but that's premium pricing. I would have to bake it into a higher rate. So that's obviously something we don't want to do.
Right.
We want to get those contributions from the seller. But now, devil's advocate, let's say that rates don't go down in the next several years. If rates go up, well, we locked in before they went up. It is a 30-year fixed. So you are going to still be able to buy the home at current market prices. You're going to have a 30-year fixed rate. So if 2 years from now, if everything goes to crap and rates don't come down like all of our analysts are saying they will, you locked in low, and you still had the benefit of a lower monthly payment for the first temporary period.
Now what happens if you don't utilize all those funds that the sellers contributed? Let's say you refi after the first year.
Okay, so they subsidize a 3-2-1 buy down. So your rate's subsidized for the first 3 years, and you're able to refinance after 12 months. That's the best scenario out there, because on a permanent rate buy down, as soon as you buy that rate down for 30 years, that money just vanished. You have no way to access it or benefit from it. So if you spent 15 grand buying the rate down, and in 12 months the rate comes down automatically and you refi, well, you just paid 15,000 for 12 months lower payment. On a temporary buy down, that money actually, it's your money, so it gets set in an escrow account that's for your benefit. So if you have 36 months of subsidized payments set aside in escrow, and you only use 12 months of it, you have 24 months remaining that you can use either as a principal reduction or use it on closing costs or additional buy downs on your next loan.
That's fantastic.
It really is. It's a can't lose situation.
Right. Okay. There's another program that came out with the state, the $20,000 loan, 0 payment, 0 interest rate. What are you seeing with that? Has that been maxed out yet?
They're still available. No, it's been a really hot program. There are a couple things you kind of have to fit into a certain box. There's a purchase price limit. So that was set up by the legislature. It's administered by Utah Housing. So it's made for new construction, first-time home buyers. So you can't use it for purchases over $450,000. And as you mentioned, you nailed it. It's there was some funky terminology calling it a grant. It is a interest-free repayable down payment. So they're not going to charge you interest on it, but yeah, you can get extra down payment and you don't need to worry about it until you either sell the home or possibly refinance it is when they're going to want that money back.
Right.
That money's set up for perpetuity so that it's going to benefit Utah citizens for a long, long time, because as they give out all of those, I believe it was 13 or 1400 of those funds that were available, as those get utilized but then paid back, they're going to become available to new borrowers in the future.
That's very interesting. I wonder if they'll look at increasing that purchase price. It's hard to find a new build at $450, especially here in Salt Lake County.
It is, and that kind of segues us into, we just heard that a lot of investors are anticipating the conforming loan limits going up next year. So as home prices appreciate, the conforming loan limit is supposed to be set at $750,000 next year.
That's huge.
It is. It's a big purchase.
That's a big loan.
It is. So I think you're naturally going to see the legislature start deal with, as homes continue to be more expensive. Obviously, this was the first offering of this type in Utah. So I think they'll analyze the results and how many people benefited from it. And I do think you're going to see those purchase amounts be increased.
Awesome. Okay. What else are we seeing out there? In terms of like economic forecast, I guess that's what I'm thinking. Like, what are you hearing from your experts about where we're going?
Well, we're in some interesting times where we've got an election coming up here in the near future. Have to talk about the election, not getting political, but doesn't matter what affiliation you are or which way you lean. If there is a party or a president that wants to be reelected, low interest rates usually help. So we really think that during the election we're going to see, some rate relief during that time. The other thing, when we look at historically, the Fed's whole goal with this has been to slow inflation. They've just been trying to stop people from spending money. And the mall parking lots are still pretty full. But they've definitely slowed the housing market down a little bit.
That's true.
So
we are seeing inflation numbers come down. They're getting closer to that target rate of 2%.
Yes, they are. And the problem is that the number that they're using to gauge that, they're looking at data that's a month or two old. Just think that that's where we're at currently. And we're actually, it's kind of, I've heard a hockey analogy. It's like, we're not a big hockey state, but when you play hockey, you don't skate to where the puck currently is because the puck's moving. You have to skate to where the puck is going. So as inflation's dropping, the criticism is that we're skating to where the puck has already been.
Right.
And it's not taking into account that these, the inflation numbers have some momentum moving forward. They are continuing to decline. Right,
which is good news.
It is.
We don't want to necessarily see deflation, though. I know I've had people reach out and ask me about that. When are we going to see all the prices of eggs, gas, whatever, not just housing, go down? But that indicates even a bigger economic downturn than I think most people would like to see.
Right. No one wants to see a recession. There are some indicators in the market that we could see, a small recession period. And it's natural. It happens regardless. There's always ups and downs in our economy, but if we look back historically, anytime during a recession also, the Fed's one main tool to stimulate the economy, to give it a little kickstart, is they'll stimulate and lower interest rates. So we've got a couple of things upcoming in the near future that are just leading us to believe that these rates are not the new norm. We are going to see a decline from where we're at.
Well, that'll be good news.
That is.
For all the home buyers out there and sellers.
Yes.
So.
Lauren, the other thing we're getting a lot of questions about are assumable loans.
Okay.
So if someone has a government, an FHA or a USDA, even a VA current loan on their house, they can sell that home and the person buying it can assume their interest rate. So there's a lot of sellers out there that have some great rates. I had someone call me today and they were looking at assuming someone that had like a 2.5% interest rate.
Oh, that's awesome.
Yeah.
But this is new because up until now you couldn't take out another loan to come up with the remainder balance. You had to have that in cash.
That has been the challenge, is when you assume someone's loan, you can only assume their current loan balance that they owe. And people have a lot of equity. So they might only have a $200,000 or $300,000 loan balance left on that house, but the home is worth $500,000 or $600,000. So it's where do we get the additional $200,000 to $300,000 to make this seller whole, to give them what they need to make out of their house. So unless someone had, a huge savings account or access to a trust fund, it was very hard to, get another mortgage and still assume a loan. But we've got a program now where it's basically a second mortgage and it's purchase money. So it's loan amounts up to $500,000. It's like 10.1% down, just to make things simple. We'll call it 10%. So if you need to borrow $200,000 to pay a seller what they want, you would need just barely over $20,000 down.
Gotcha.
And then you just have a first and a second, and if there's an opportunity in the future when rates come down, you can refinance those back into one, or you can just, if it makes sense, to keep both mortgages because of how low that first rate is. Then you just keep that. It's just a 30-year fixed term. So
that's fantastic news.
And as houses sit longer on this, we've got a winter months coming up. Winter is coming, as Game of Thrones would say. So we anticipate homes are, probably we've got a few months where they're gonna sit a little bit longer, and we're gonna have some great opportunity to really go in and potentially, like we talked about at the beginning, get a house on sale. And wow, if you could take over someone's interest rate in the 2s or 3s.
Absolutely. That's huge.
If there's one reason to buy right now and you could find one of these homes in that type of opportunity, what an amazing. That's life-changing.
Absolutely. Because we're not going to see those 2 to 3% ever again.
Probably not in our lifetime.
Yeah. So.
Not that we want to see us get into a, the situation that caused that ever again, but it was, the government was doing everything they could to make sure that, the U.S. economy was strong and we weathered that pandemic, and they did a good job of it. So.
Right. Yep, absolutely. Okay, so what would you say to somebody who's kind of on the fence right now about buying? They're currently renting, they want to buy, but they feel like, maybe it's just not the right time. I'm going to wait for those rates to come down like he's talking about.
Everybody's situation is different. My job is just to look at all the options. I'm not going to try and talk someone into doing something that's not best for their situation. But one of the realities is that, I've heard the phrase, well, what's your interest rate if you're renting? Well, you're not gaining any equity. You're not putting any principal amount into a loan. Basically, you're not living somewhere that's a tool for your future economic success.
Building wealth.
Yeah, your home is always the biggest investment most people will ever get. So if you're renting right now, just make sure you're renting because it is your only option. If there is an option to gain equity and gain wealth, every house is a stepping stone. So by you possibly paying a little bit more in payment, you could technically look at it as you're investing in your retirement. Yes, your monthly payment on a home's going to be higher than what your rent is right now. But they're projecting home values are going to increase, not just Utah, nationwide, from 6 to 8% next year. So when you start looking at a $300,000, $400,000, $500,000 house, if it's going to increase in value, even if it's only 6% that first year, look at the amount of money that you could be missing out on.
Exactly. And when you say missing out on, we're talking about accruing that equity as an asset to them.
Correct.
If they buy now, next year the $500,000 home is going to be $530,000.
Yes. Yep, 530, 540. And that's year after year. That's compounding.
Right.
So
Yep. That's good news for homeowners.
it is. Well, that's, you look at some of the wealthiest people in the United States, and their pathway to that wealth was through real estate and home ownership.
Absolutely. Well, that's awesome. Do you have anything else for us today, Brady?
You know what? I would just say one tool that's been very popular for us right now, it's a promotion that I'm running. We're offering a free refinance. So, hey, I'm going to acknowledge
I think it's great.
the rates that we
Yeah.
have right now, they are not the rates you're going to want forever.
Right.
So what I'm willing to do is, if you purchase a house through the end of this year, you are going to have until March of 2025. We call it a free fi.
Mm-hmm.
So you'll be able to get a refinance through me in Intercap Lending, and I'm not going to charge you any of our normal lender fees. So that's our underwriting fee, our processing fee, and our credit report fee. So it's a $1,600
That's fantastic.
savings.
I
Oh.
think the overwhelming is.
The studio audience loves the free
They're
fi.
excited about that.
I'm excited about it.
Yeah.
So, no, that's I mean,
So it's not all doom and gloom. This is what I'm taking from this conversation with you today, that there are, first of all, there's options for people who need to buy now to bring that payment down and make it a little more comfortable. These people that are buying now, they're going to be gaining equity just in the next year alone, including, staying in the home for 10 plus years.
yes,
So all kinds of good news.
yes, no, and the demand for housing right now, it hasn't gone away. We are still at an all-time high. The only thing that's keeping that demand tempered is just the interest rates. It's just the payments, but we have some great solutions. We can overcome those challenges. And even if the market, if this is not the right time for you right now, we still want to provide you with the options, just so you're aware of what you could do in the future. So it's never too soon to start looking at what your home purchase options are.
Yeah, I
Even
agree.
if you're in a stage of your life where you tell Lauren and I, hey, this isn't the time, it's not going to happen for me this year. Well, let's see if there's anything standing in your way for next year or 2 years from now.
And it's never too early to get those things set in order. You got to get your credit score where you need it to be.
Yep.
Looking at debt to income ratio. Maybe you're, self-employed and you need to get 2 full years of that to have it ready. A lot of people don't realize what's necessary to get that loan approval, but once they have a conversation with you and you have an opportunity to look at their numbers, it puts everything into a clear focus for them.
Exactly, and nothing that we provide is absolute. So we have conversations on your home purchase options, they're fluid. So just because the answer today is, we might need to make some improvements. Once you make those improvements, the options reset. The deck of cards gets reshuffled. So we provide what's called a pathway to qualification. And if that, if your current numbers aren't where you want them to be, we're going to advise you on, as you said, do we need to get your credit scores up? Where do we need to be income-wise? One of my most popular services is for self-employed people, because obviously when you file your taxes as a self-employed person, you want to minimize your tax exposure, how much income tax you need to pay, but it's a double-edged sword, because as you limit your exposure, you also don't show as much income. So it's a little bit more of a process for a self-employed person to make sure that they're showing the right amount of income on their taxes to get the home that they want. We still want to meet those purchase goals that they have.
Right. That's awesome.
So that's always available in the springtime. If you're self-employed and you want us to, before your CPA files those taxes, we'd be happy to take a look at them and let you know what they mean to you in a purchase.
So we're going to have a link to your site in the comment section of this podcast. So anyone who's interested in getting a hold of Brady, click on the link. It will take you directly to his website, and you can get in contact with him there.
Well, thank you so much.
Yeah, it was great to have you. Thank you for joining us today.
Hey, anytime I get a chance to speak with one of the best real estate agents in the state of Utah,
Thank you.
you didn't have to ask
Oh, thanks.
very hard.
Yeah.
Okay.
All right. Well, have a wonderful week, and we'll see you soon.
Okay. Thank you,
we'll
Lauren.
do it again. Okay,
Okay.
we'll see you.
Bye.
Bye. Okay, we just said bye.
No, I liked it.
We said
no.
bye to each other. Oh, we're looking at each other.
No, I don't think there's any. I stumbled for just a
Okay,
second on
bye.
that take.
We're
No.
looking at each other's face. That's funny. That's okay.